Today's episode is sponsored by Trading 212, the platform bringing commission-free investing to everyone. Welcome to Many Happy Returns, where we aim to make you a better investor. I'm Roman.
And I'm Michael.
The US presidential election is less than 2 weeks away, and the result hangs in the balance. While markets appear calm, a second Trump term could have profound effects on global economies and investments.
I want to know how the so-called Trump trade might impact different assets and sectors. And in today's dumb question of the week, is a strong or a weak dollar better? All right, let's get into it. So this week we're going to be talking, at least a little bit indirectly, about American politics and its impact on global economies and global markets. Now, whenever I hear Americans talking about British elections and our political cycle, I kind of get frustrated about how little they understand and misattribute things to all sorts of different political parties. So let's turn the tables on them and use our ignorance about the American political system against them today. So I think it's fair to say, as we record this on the 21st of October, it looks like it's more or less a coin flip who's going to win the US election.
Yeah, it's interesting. If you look at those predict-it markets or the kind of betting markets, they're predicting that Trump's probably going to win. Whereas if you look at polls, it's more like 50-50. So yeah, it's not clear which way it's going to go. And there are questions about the accuracy of those polls. But look, I think it is pretty close and it's going to be a really tight election this time around. And I think markets are probably not going to like that because whatever happens is going to be a bit of a surprise.
But you say that. Well, markets seem completely unperturbed at the moment. The stock market's not panicking. Volatility is a little bit higher than it has been over the last couple of years, but not by much.
I think that's partly because of two things. I think the first thing is that neither of the candidates is going to be very market unfriendly. The second point is that at this point, there's still uncertainty. So that's probably why there isn't a great deal of volatility. And that's what worries me, which is that if markets are pricing in a 50-50, whatever happens is going to be a surprise and we're going to get a dislocation of some sort. And that'll probably create volatility.
It's weird, isn't it? Because we always say markets hate uncertainty. But in this case, they're looking through it, at least right now. So let's take this in turn then. We've got a potential second Trump term, and that could have impacts on the economy and on markets. So let's start with the economy. Now, obviously, there's a huge basket of policies Trump's talked about. He does something called the weave, where he just talks and rambles, and then a policy sort of appears as if by magic from it. And he's weaved a lot, but we've ended up with some quite radical policies, potentially, on trade tariffs, on immigration, and on Federal Reserve independence, maybe. Now, those three things could be a departure from the norm and might have big impacts on the economy over the medium and long term. And I think the thing at the front of everyone's mind is that we've gone through this period where inflation was really high. It's slowly come down, almost to target. We've had interest rate cuts starting. Are Trump's policies going to reignite inflation?
I think so, certainly if you believe most economists and what their forecasts are telling them. So if you listen to investment bank forecasts or you look at something like the Peterson Institute's forecasts, the expectation is that these greater tariffs are going to feed through to higher inflation and probably weaker growth.
So maybe it's worth saying what Trump is proposing, because he did implement tariffs in his first term that were focused mostly on China, but now he wants to go one step further, and he's talked about a universal baseline tariff of 10% on all imports into the United States, wherever they come from, including from free trade partners, presumably. And then he's also talked about upping those tariffs on China to at least 60%. So this is a big ramping up of protectionism.
Now, the reason why I think that could have a much larger impact the second time around is that, firstly, the scale and the breadth of the tariff increases is much larger. And also the secondary effect is retaliation from other trade partners imposing taxes on US exports. That could have a huge impact, because it'll create this system of tit-for-tat tariff increases.
We saw a little bit of that the first time round. I know Trump put in those tariffs on steel from the European Union, and the EU reacted in quite a soft way. They kind of tried to negotiate a solution, and then Trump went further, and then they had to retaliate. I think this time round, they're very much prepared to hit back hard and fast, is what I heard the leak from one senior diplomat saying. There was a great piece in Politico a couple of days ago, which said that the EU has set up a rapid reaction task force to prepare for the fallout from the elections. And this has been set up by Ursula von der Leyen, who runs the European Commission. And unofficially, behind the scenes, people are referring to it as the Trump Task Force. And some of the quotes that Politico has from insiders are interesting. One says, "Last time we didn't believe how far Trump would actually go. This time we've had a lot of time to prepare. Europe has changed a lot and we are ready to act." And another one says, "Brussels has a list that is ready." This is referring to retaliatory tariffs. And they are pretty confident that they can win this trade war. Don't know, but just the words trade war between the US and Europe, it's making me a little worried.
Yeah, we're talking about the largest economies in the world effectively clamping down on trade between themselves. So if we just put ourselves into the mind of Donald Trump temporarily, well...
This is squirrel!
Oh, a cheeseburger. He sees trade as something which you win. So you export more than you import, and that means that you've won the game. Whereas that's not really the way that economists see it. They see it in terms of what's most efficient for your country to export, may be different from other countries, so it's mutually beneficial to export things from one country to another due to the cost of doing things. So everybody can benefit from trade. It is a kind of lifeblood of growth, and if you clamp down on it, then that usually stifles growth for everyone.
It was interesting the first time round with Trump, when he started to target China with these tariffs. Generally, as far as I remember at the time, people were saying, this is terrible, it's going to kick off a trade war, it's really bad. But then Biden came in and he didn't reverse the tariffs on China. If anything, he upped them and specifically targeted certain industries like electric vehicles and microchips. So I'm just wondering, where are we now? It seems to be that old position of tariffs are bad pretty much always has gone.
Yeah, I think it was, in a way, interesting to see what happened, and maybe good, because we tested what was pretty much the conventional thinking amongst economists. And like you say, at this point, there wasn't a problem. However, I think you can't ignore the past. And I think the reason why there wasn't a problem was that there weren't a lot of retaliatory tariffs. So we didn't really have much of a trade war. In certain sectors, things like soybeans, farmers in the US exporting soybeans to China, for example, that was impacted. And if you look at electric cars, for example, America hardly imports any electric cars from China. So I think that didn't really make a huge impact this time around, even after Biden took it a step further. But I think what we're talking about here is a step upwards in the scale of those tariffs. So I think it's going to have a much bigger impact this time around.
It's kind of going from a localized skirmish to an all-out trade war with the world, if these policies came into effect.
And I think this is one of the problems, which is that if you're trying to work out Trump's policies, you really have to listen to his speeches. And if you listen to his speeches, it's just a rambling mess, and you can't really work out what on earth he's talking about. He does talk about certain things consistently. He says tariffs are his favorite word, for example. But what does that mean in terms of numbers? Well, it's hard to say. And taking this weave and turning it into numbers is almost impossible.
But people have tried. So you mentioned the Peterson Institute, which looks at international economics. And they published a working paper called The International Economic Implications of a Second Trump Presidency. Now that is bang on for what we're talking about, Roman. And there's a beautiful table in there where they've done lots of detailed analysis, actually, if you read through their paper. And they've taken each of his policies, these headline ones, and they've said, what impact would it have on GDP growth for the major economies in the world and on inflation? And when we're looking at these tariffs, so let's focus on those 10% baseline tariffs around the world. They reckon that if that is faced with retaliation, which let's face it probably would be, then that would mean the US economy would be around $721 billion smaller than it would be without those tariffs. But interestingly, the US's major trading partners would also suffer quite significant falls, weirdly except Japan, which it seems to have boosted. And in terms of the inflationary impact, it reckons in the US, it would be 1.8 percentage points higher than in a world where these tariffs weren't brought in.
So just to put that into context, The US economy is about $30 trillion at the moment. That's GDP. So 700 billion is going to be, over a 4-year period, about a 0.6% fall in GDP, which, if your growth is about 3% on average, doesn't sound like a lot, but in fact, it is a big impact.
The thing I just don't understand about the logic of the policy, even if you take Trump at face value and this kind of zero-sum game of trade, which we don't believe is true, but let's take that at face value. Why would you want to put a tariff on banana imports when the US doesn't grow bananas? That's just a tax on your own citizens.
Yeah, I think the argument about things being cheaper for some countries than others makes absolute sense in many cases. So I think that way of seeing trade as something you've got to win is almost kind of kindergarten approach to trade policy.
I guess what Trump and his advisors would say is that their major trading partners are not playing by the rules. China was maybe the biggest outlier, stealing IP, subsidizing its industries in an unfair way to undercut foreign producers, and not letting US companies export into China with the same freedom. And so you had to go after China with tariffs. And, you can point to unfair trade practices around the world. The EU for sure has subsidy policies and non-tariff barriers.
So does the US.
So this would be their justification, right? If people aren't playing by the rules, well, screw them. Here come the tariffs.
Yeah, I think it's also possible that they've underestimated the strength of the EU. Everyone talks about the EU like it's a lame duck. It doesn't produce new technology. It really lags the world with tech unicorns. But the fact is that they are an exporting powerhouse. And if you go to war with them, that union is really big. So I think it will cause pain. And I think once people see that and they see the effect on the money in their pocket, then I think the appetite for these policies will wane pretty quickly, as it has in the past when the US has really gone deeply into this kind of tariff frame of mind.
Yeah, it's hard to see widespread tariffs as anything but inflationary. They put an extra cost on imports, right? That's kind of the job. And there's a quote I like from Henry George, who is a 19th century American economist. And he says, "What protectionism teaches us is to do to ourselves in times of peace what enemies seek to do to us in times of war."
Yeah, that's a great quote.
And in terms of inflation, the other thing I guess people worry about is the fact that Trump, by instinct, is a tax cutter. He wants lower taxes. But he also doesn't really like to cut spending. He's a populist in that way. So what that leads to is what's called unfunded tax cuts, which increase the budget deficit. And remember that the US budget deficit is already very, very high at 7% of GDP.
Hey, didn't someone else try to do this? Unfunded tax cuts?
A lettuce.
Oh, yeah.
But that is what people worry about, isn't it? Could this have a kind of shock in the treasury market?
I think it could. And I think that the treasury market won't like it because you're going to have to fund this with issuance of more US treasuries. It is still the biggest market in the world. It is still seen as the safest. But again, that's going to increase the cost of funding for the US if it happens.
Yeah, I think it's fair to say Harris would be running a chunky deficit too, though I've seen some estimates that it's probably going to be around half the size of that in a Trump presidency.
And certainly the CBO, the Congressional Budget Office, the non-partisan organization that projects debt to GDP for the US, that's suggesting that debt is already on an unsustainable path for the US. And again, I think this is a result of debt to GDP increasing and people noticing, oh, everything's still okay. But at a certain point, everything stops being okay, as we found in the UK.
We just don't know when that point is. And it is a big turnaround. Like, I remember a few years ago, the Republicans were always banging on about the national debt, usually as an excuse to try and cut Social Security. That's just gone off the table now, I presume because Trump doesn't want to cut Social Security and entitlements.
Yeah, historically, it's been for military spending for the Republicans with tax cuts. That's what's increased the fiscal deficit. And then for the Democrats, it's been spending on social programs. Either way, the fiscal deficits remained in place.
And I think we should say that deficits aren't necessarily a problem. It depends on the economic conditions of the time. But right now, we're in a situation where there are inflationary pressures. We've seen that over the last few years. We're very close to full employment, if not there. And there's not a lot of spare capacity in the economy, probably. So That's the risk, isn't it? That you can stoke inflation if you run a big deficit.
Yeah, tight labour market, lots of fiscal spending, tax cuts, all of this is inflationary. So I think that's a fairly toxic combination. And that's going to have market impacts as well as effects on the economy.
Well, let's come back to the market impacts. Let's just rattle through his other policies. So the eye-catching one is around immigration, and I think it's fair to say mass deportations is what he's talking about.
So let's just quote him, and it's very difficult to find a single quote, but he says, for example, that this is going to be the largest domestic deportation operation in American history. And he says he's going to target 15 million to 20 million unauthorized immigrants to the United States, approximately 8.3 million of whom are thought to be in the workforce.
So pulling 8 million people out of the workforce, if they were able to do that, would be a pretty massive negative supply shock for the labour market.
And again, that's going to be inflationary. If you reduce a part of the labour market, then effectively you're going to have difficulty filling those roles unless you pay more. And I think that's going to be a problem.
If you look at public polling, this is the kind of policy that actually does poll pretty well when you're talking about these illegal immigrants, as Trump would put it, who are undocumented and have crossed the border without authority. Americans generally don't want them in the country. They're not necessarily anti-immigration as such. If you look at the polling, they're generally pro-high skills immigration, but they want control of their borders, as they put it. They want to decide who's coming into the country. But if you implement the policy, there are going to be massive effects. Like, genuinely, if you were deporting that many people, I think you'd put off a lot of immigration, even the kind you want.
But whatever happens, that's going to be a problem, because if you've got 8 million people suddenly leaving the workforce, how are you going to fill those roles unless you fill it with labour from people who live in the country legally and who are going to charge more for that service?
I think it's also a fantasy to think you could deport millions and millions of people who are people's friends and neighbours and co-workers and not see some kind of social pushback.
And they will have married into the community. There'll be crying children, crying mothers. And I think just as a PR exercise, it'll be catastrophic. So to implement it, I think is going to be very difficult.
I mean, the US has done something a little like this before. Under the Eisenhower administration in the 50s, a little over 1 million undocumented immigrants were sent back to Mexico, supposedly, using military-style tactics.
But I think that was possible then because there weren't social media. You can't show the screaming children, the crying mothers, and that's going to happen this time around, which will make it more difficult, I think.
And maybe the final of his big policies we should cover, and maybe it's a bit too specific to call this a policy, it's just kind of a vibe that's going around, is the erosion of Federal Reserve independence.
Yeah, certainly during the COVID crisis, there were some staggeringly bad statements by Trump about monetary policy, where it really didn't feel as if government was cooperating with the Fed in order to get through the crisis. But look, he chose Jerome Powell, who I thought was a great guy to run the Fed. And when push came to shove, he didn't actually fire or try to fire Jerome Powell, which was potentially reassuring, although just saying that the president allows the central bank to be independent should not be something which is seen as a positive. It should just be a given.
So what's Trump's problem with an independent Fed?
He just likes bread and circuses. He wants interest rates to be low and he wants stock markets to go up. That was very much seen as his sign of success for his presidency. And if interest rates are low, that's more likely to happen. So I think he will push for lower interest rates, whatever happens. But his policies are inflationary. And that means the Fed will probably have to raise interest rates, unless he goes to a kind of Turkish-style model where the president suddenly turns around and says, no, we're going to keep interest rates low despite high inflation. And look what happened to Turkey.
Trump has said of Jerome Powell that he has the greatest job in government. You show up to the office once a month and you say, let's flip a coin. And everybody talks about you like you're a god.
You just can't stand other people having the limelight. It's really odd to see in a leader of the free world.
Is that a fair assessment of what the Fed chair does? Turn up to the office once a month and flip a coin?
He has a legendary work ethic. And if you just read about what he did during the COVID crisis, he never stopped working. So, no, I think it's fair to say.
It's hard to know what Trump actually wants to do with the Fed because there is no specific policy. But he has said, I feel that the president should at least have a say in there. I feel strongly that, in my case, I made a lot of money. I was very successful, and I think I have a better instinct than, in many cases, people that would be on the Federal Reserve or the chairman. Thoughts?
Well, that's kind of the point, which is that the central bank has to remain independent. And just being a businessman, I don't think necessarily qualifies you to be someone who's good at deciding monetary policy. The important thing is that you're not a politician. So you're not worried about staying in power or ensuring that whoever's in power doesn't stay in power. So I think being politically independent is the really important aspect of central bank independence.
Yeah, I don't really want a world where the president is bullying the Fed into cutting interest rates. I want a world where the market does that. But there were some interesting quotes over the weekend in an interview with the Financial Times from Kevin Hassett, who is potentially Trump's pick to replace Jerome Powell. And Hassett said, I'm sure that President Trump does support central bank independence, but he also wants to have his voice heard. And he wants to have people there who are truly independent. I think there's a reasonable case to be made that the Fed hasn't been as independent as it should be. And he goes on to cite things like the central bank raising rates in 2016, just before Trump was inaugurated. And Hassett says the data did not support that hike. And then he says when fiscal policy became really expansive under the Democrats and they were running a big deficit after COVID, the Fed should have put rates up even more, I think. He said the Fed didn't do anything to offset it. Basically, they're behind the curve. Maybe that's a fair criticism, but it probably isn't due to the lack of independence.
Yeah, I don't think it was a political decision on the part of the Fed. Misreading the economic tea leaves, perhaps. Yeah, but I don't think they did anything that was interpretable as political.
So let's take all these policies together then, which are tariffs, deportation of unauthorized immigrants, and a potential revoking of the Fed independence. Again, let's go back to that Peterson paper, because they combine these three big-ticket policies and come up with an assessment, again, around its impact on GDP and inflation.
So what they've done is they've come up with a low scenario and a high scenario, depending on whether we get retaliation or we don't. And in the low scenario, the drag on GDP is going to be 1.5 trillion over the 4-year period. In the high scenario, 6.4 trillion. And the cumulative effect on CPI inflation will be 14%, 13.9 in the low scenario, and 23% in the high scenario. So a huge increase in inflation, comparable to what we saw during the post-COVID inflation spike.
Now, those are big error bars because this is a very difficult thing to forecast. But directionally, they're saying these policies are not good for US growth or US inflation. And I'll quote them here. They say, we find that all the policies examined cause a decline in US production and employment, especially in the trade-exposed sectors such as manufacturing and agriculture. We also find higher US inflation. The trade policies do little to improve the US trade balance. However, the erosion of Fed independence does so by causing capital outflows, a significant depreciation of the dollar, and higher unemployment towards the end of the term, which worsen American living standards. In sum, while Trump promises to make the foreigners pay, our analysis shows his policies will end up making Americans pay the most.
It's worth saying that it's not just the Peterson Institute who've been saying these things. If you look at reports from Goldman Sachs, for example, they also say that the impact of tariffs on US inflation is going to be very negative. It's going to raise inflation. And the immigration policy is going to cause problems because of labour shortages and a reduced rate of growth in the workforce.
It does seem to be the economic consensus. I guess it's just a question of magnitude.
Today's episode is sponsored by Trading 212, the platform bringing commission-free investing to everyone. Trading 212 Stocks and Shares ISA is the cheapest way to invest, with zero commission and the lowest FX fees on the market. Looking to keep things simple, you can easily automate your investing with pies that allow you to rebalance your portfolio at the click of a button. Customers can also benefit from the Trading 212 card, which offers 1.5% cash back on all transactions until November the 1st, 2024. Many Happy Returns listeners can claim free fractional shares worth up to £100. Just create and verify a Trading 212 account, make a minimum deposit of £1 and use the promo code RAMIN, RAMIN, or the link in the show notes. When investing, your capital is at risk. Past performance doesn't guarantee future results. Other fees may apply. Interest applies on the uninvested cash in your account. Free shares can be fractional. Terms apply.
Let's move on to the market reaction. Because given everything that we've said, it sounds like there could be some quite large economic impacts. And yet the market doesn't seem to be pricing that in. So to me, that leaves three options. Either the market doesn't believe those economic forecasts are true, or it thinks Trump won't be able to implement the policies, or at least such harsh versions of them, or it believes that would be the economic reaction, but that it wouldn't affect markets too much.
Yeah, it seems as if markets think it'll just be a replay of what happened last time, which is a lot of quite extreme rhetoric before the election, but then when it came to it, the actual policies themselves weren't that extreme. And I think some of the policies will be good for certain sectors. For example, deregulating the energy industry. That's going to give a boost to the oil industry, to the coal industry. And previously what we saw for the first term was tax cuts really helped tech companies, which onshored a lot of their money and paid less tax. That immediately increased their margins and pushed share prices up. So that was definitely a shot in the arm for those sectors. But what we're talking about this time around is a broader based set of tariffs, which will probably have a more widespread negative impact if it's implemented. So let's just start with inflation. I think that's the big one. If that really does increase a lot and the forecasts are correct, then it'll have a huge impact on the fixed income market because, as we always say, inflation's kryptonite for the fixed income market. So term premiums would increase massively. We'd have a huge steepening of the yield curve because uncertainty about rates increases the term premium. So long-term rates increase a lot. Also, inflation expectations would drive the long end of the curve. The short end of the curve would probably move up because the Fed would have to do something about it.
Unless it's not allowed to by the president, in which case the short end might move down and you get an even steeper yield curve. No, isn't that what we're talking about with the potential compromising of Fed independence?
If we go full Erdogan, then we'll go to a world in which the Federal Reserve is irrelevant and monetary policy set by the president. So the short end would be very low, long end would be high, and the term premium would be very high indeed.
Doesn't even have to be full Erdogan though, does it? It just means appointing someone who shares the same views as Trump as Fed chair.
Yep, that could be a backdoor to not having an independent central bank. But I don't think markets would have difficulty seeing through that. It would be pretty clear. Inflation would be very high and policy would be very accommodative. So I think that would be a problem for markets. And I think it would have a huge effect on the funding cost for the US Treasury market.
The yield curve has steepened a bit in recent weeks, I believe. Is that because the odds of Trump winning have gone up a little bit?
I think so. I think that's definitely one clear impact of policies that Trump's been talking about. Then thinking through what would happen to the US dollar. Now, the primary driver of currencies is interest rate differentials. So if it was the case that the US interest rates were much higher than elsewhere, that would make it more likely that people would park money in dollars, and that would strengthen the dollar. Unless it was the case that inflation was much higher in the US than elsewhere, which would tend to reverse that. But I think probably the initial effect would be to strengthen the dollar.
I've seen forecasts both ways on the dollar. Seems like there's a million things that feed into it and no one quite knows what the impact would be.
Yeah, economic uncertainty. If the dollar's still seen as a safe haven, that would tend to strengthen the dollar. But if it's seen as an economic basket case and it's going to have weaker growth as a result of these policies, that would push the dollar down. I think what's fair to say is there'd be greater volatility for the US dollar versus other currencies.
All right, enough about fixed income and dollar strength. What people really care about is the stock market, Roman. What's going to happen to stocks? Because at least Trump, I think, one of the ways he views himself is as good for stocks. And one of the ways he judges his success at least if you listen to what he said in the first term, is the stock market going up.
Yeah, and I think that's why markets are fairly unperturbed by a second Trump presidency, because he'll be looking to see what happens to the stock market for every policy announcement. And if he sees a big negative impact, I think that could make him backpedal on some of the policies.
But as you said, a big reason why stocks did do pretty well under Trump's first term is that he was able to bring in big corporate tax cuts. But that's done now. You can't do that again, really. So it's probably harder to get these sort of quick wins by just shoveling money at US companies.
And the concentration now in just a handful of companies, the Magnificent Seven, is so large that just focusing on the tax policies for those companies will have a huge impact on what happens to global markets as well as the US market.
I think he might get activist in helping US companies abroad. I've seen him start to talk about things like the EU forcing Apple to pay its tax bill in Ireland and saying that was unfair and an unfair reading of tax law. I don't know how much Trump actually knows about European tax legislation, but I think he would try to use the might of the US to favour US companies in foreign markets.
But it's fair to say that that's a really important measure for him of success. But I think his focus on what happens with markets is probably the greatest safety release valve for his policies. If he does something too crazy, markets are not going to like it.
Should we think about the potential impacts across different sectors? Because thinking of the stock market as one big beast is not always helpful. Now, the obvious sectors you might say might benefit from Trump would be things like traditional energy companies, fossil fuels, defense manufacturers maybe, certainly cryptocurrency. He's very hot on that at the moment.
He's launched his own cryptocurrency, I believe. Is that right?
Yeah, he's the grift that keeps on giving.
Ooh.
But deregulation generally will benefit these sectors. It's interesting, though, on energy, because Elon Musk has been stumping for Trump pretty hard, even though Trump has historically been a skeptic about electric vehicles and a skeptic about batteries and green energy, and has been very much a sort of drill, baby, drill kind of guy.
Yeah, apparently he's going to find a job for Elon Musk in the new regime. So if he does become president, Musk is going to have a job temporarily.
Yeah, apparently the job's going to be around simplification of what the government does and making efficiencies in federal programs, which would be a good thing if they were able to do that well. I don't know if Musk's already got enough on his plate, but we'll see.
So thinking about sectors again, I think companies which are domestic, which currently are not doing particularly well because of competition from imports, those are the companies which will probably do well under this protectionist regime.
You're holding onto your small cap index in hope, right?
Well, yeah, because generally these are companies which service their local economy and service the domestic economy, and which have really been out of sight for so long because of what are multinational tech companies like Apple, Microsoft, Netflix. All of those have completely stolen the limelight, and a lot of good companies in the small cap space have just gone under the radar. So I think for my small cap holding, this would be pretty good.
Roman says vote Trump. But I always think we probably overestimate the impact of a president on the stock market and specific sectors. Like, you take the example of energy stocks, where you would say Trump's a pro-fossil fuel guy and his policies were pro-fossil fuel. And yet, over the course of his presidency, the energy sector completely tanked. Not because of what Trump did, but because of the oil price crashing during COVID. So it's like, you might think, oh, Trump's in favor of energy, buy energy stocks, but then events might not agree with you.
And I think it would be unfair to say that the Biden presidency was anti-fossil fuels. It certainly wasn't. Lots of drilling licenses were approved under his presidency, because it's so important for the US economy now to have that energy independence, and shale oil has really transformed the energy independence of the US.
And natural gas, like the Biden administration saved Europe really by exporting its LNG to us. So do we get a bit too hung up on who the president is? Does it really make that much of a difference to markets?
I think you're right, unless the policies are really crazy and lead to a huge dislocation. Yeah, really, it's kind of irrelevant, because long term, what companies try to do, despite politicians, is grow their earnings. So I think the job of politicians is really not to stand in their way, but they do need to protect consumer interests with some regulations, of course.
The other thing about the US is it's not really the president who makes a lot of this policy. Congress passes the laws, so a lot of this is going to depend on the makeup of Congress, which again we don't know until the outcome of the elections. There are some things which he can do unilaterally. A lot of the immigration stuff and the deportations he can do. Some of the tariff stuff. And there'll presumably be a lot of fights at the Supreme Court if he goes too extreme.
Yeah, so there are certain checks and balances in place which would restrict what can be done. If there was something that was very damaging to the economy, then I think there would be pushback still. It's not the case that a president can just waltz in and turn things around completely. They are very constrained in terms of what they can and can't do.
At least if they abide by law and precedent. Is the real danger here, at least in terms of market returns, neither a Trump or a Harris presidency really? The danger is a very close disputed election, which potentially leads to legal fights and real fights on the streets, that kind of thing. That would be terrible for markets, right? If we got uncertainty about who is going to be the president after the vote.
Yeah, I saw a map of the US and it showed Republican versus Democrat states. And it's interesting because the Democrats form this kind of ring around the country on the coasts. And then the central bit of the US and the southern bit is very much Republican. And it does start to look a little bit like you've got two separate countries. And certainly if you compare the political debate now versus when I lived in the US in the 80s, it just seems so much more polarized.
I mean, yeah, you had, 49 out of 50 states voting for Reagan? Couldn't get that these days. But I hope it all works out because we need America in many ways to lead the world. And I've had a sense in the last few years that America is back. Watching that SpaceX launch the other day and the catching it on those little chopsticks when the booster stage came back down, and all the work in AI, and the very strong economy compared to the rest of the world. America, please don't ruin it now.
Now, whatever happens in this election, there's going to be some kind of volatility in markets. And if you want to be soothed by very calm discourse, which is what we tend to have in our community, then you can learn more about joining us by going to pensioncraft.com/membership.
Okay, today's dumb question of the week. Is a strong or a weak dollar better? Now, I chose this question because this seems to have been something that was once on the mind and confusing President Trump. So in his first term, there was a leak to the Huffington Post that revealed that on one night, Trump picked up the phone at 3 a.m. and called up his national security advisor, Michael Flynn, and asked him about the strength of the dollar. Apparently, Trump said, "Michael, is it a strong one that's good for the economy or a weak one?" And Flynn reportedly said, "I'm not an economist. Bring up one of your economists." So what is it, strong or weak?
Depends on who you are, I guess. If you're going to have a weak dollar, then if you're exporting stuff, it makes your products look more attractive because they look cheaper in the foreign currency. If you're importing stuff, then clearly it's going to be a problem because you're importing inflation effectively. By devaluating your currency, foreign imported stuff looks more expensive. Now, the US is a net importer, so net, I guess it's the case that if you have a weaker dollar, it's going to be bad for your economy. But the history of trying to manipulate the currency is not a good one. It doesn't usually end well, either because your intervention fails. Central banks have often tried to buy or sell their currency to change its value, but its effect is temporary because the flows in foreign exchange are just so huge. You have to buy in such huge size or sell in huge size to make an effect. And eventually you run out of firepower. And even if it does succeed, it may not achieve what you expected it to.
And the dollar's an interesting one because obviously it's the US's currency. But in many ways, it's also kind of the world's currency. It's the reserve currency in a large part. It's what most international trade is conducted in, and it's held in massive piles by central banks around the world. So maybe when we're considering this question about a strong or a weak dollar, a lot of the big effects are not on the US. They're on emerging economies often, who have borrowed in US dollars.
Yeah, it's kind of like there's a hippo in the swimming pool and all the other smaller animals, which are kind of bobbing around, get affected by the hippo when it changes its behavior. So if we look back in history, when the dollar strengthens, then historically that's been a problem for emerging markets because if their currencies devalue, it can destabilize their economy. So this creates a kind of negative feedback loop. If you see that the currency is devaluing, then presumably that'll cause outflows from the country and that'll exacerbate the fall in the value of the currency. Also, if they've issued foreign debt in dollars, say, it's going to become much more expensive to service that debt when they convert their devalued currency into dollars. And then if you look at their interest rates, usually it creates some kind of banking crisis. Interest rates increase, default rates increase. So you get this downward spiral as the US sends shockwaves into the world via its dollar strengthening. Generally, it's a bad thing to happen for EM currencies.
Isn't it also the case that some emerging markets have pegged their currency to the dollar? And if the dollar has a big strengthening, defending that peg gets very hard and expensive.
Yeah, so for example, if you look at Sri Lanka, they had not a direct peg where you try to keep the exchange rate in a precise range. They had what was called a managed float exchange rate system. But that requires intervention by the central bank, in this case CBSL, which is the Central Bank of Sri Lanka. But then, of course, you have to defend that with your foreign exchange reserves. But if those get depleted, which is exactly what happened to Sri Lanka, partly because of what happened in the COVID-19 pandemic, there was a lot less tourism, of course, reduced remittances from overseas workers, and they had lots of large debt servicing costs. So this combination of higher US interest rates in 2022 and increasing oil prices really caused a problem for Sri Lanka. And then in March 2022, essentially the situation became untenable and they were forced to devalue the rupee.
They basically ran out of dollars, didn't they?
They ran out of dollars and now they've got a floating currency. So while it is indirect, this was very much a result of things which were happening in the US.
So I guess this reinforces the point that we need America to be responsible as the world. At least as the global economy is currently set up, a lot of it hinges on America.
Yeah, if you're the hippo in the global swimming pool, you've got to be careful how you move.
Thank you for joining us for Many Happy Returns. Do send us your questions, no matter how dumb, at the email address mhr@pensioncraft.com.
And do remember to check out pensioncraft.com for all the information about our membership and investment coaching options.
Many Happy Returns is a Pensioncraft production, co-hosted and executive produced by Romin Nakiza and Michael Pugh. This podcast is for informational and entertainment purposes and is not financial advice. We do not provide recommendations or endorse any decision to buy, sell, or hold any security. We cannot be held responsible for any actions listeners may take, and investors are encouraged to seek independent financial advice.